Again, welcome to the new session of Indian financial system. Good morning. Let's today talk about a detailed look at the one of the most essential pillars of the Indian financial system, that is the regulatory framework of the Indian financial system, particularly focusing on the role of Reserve Bank of India, or commonly named as RBI, the central banking institution of India, and it plays a multifaceted role in regulating the entire financial ecosystem of the country. It established in 1935 under the Reserve Bank of India Act. It was nationalized in 1949, and since then it has been operating under the ownership of Government of India. About the RBI, as we talk about, there are three core components. What we can say, the role of RBI are divided into three core components. The first one is role of central bank of country. So let's begin with the most fundamental function of RBI, that is acting as the central bank of the country. So as we know that the RBI is the central bank of country, it holds the monopoly on currency issuance in India. It is solely responsible for printing and distribution the Indian rupee through its currency printing press. This ensures uniformity, safety and trust in the national currency system. The RBI also acts as the bankers to the banks. This means it provides essential banking services to all scheduled commercial banks, including maintaining reserves, offering emergency liquidity, and acting as a lender of last resort during financial distresses. So it is the second role of RBI as a central bank of country. Thirdly, it also plays the critical responsibility of regulating and supervising the banking sector of the country. It sets up the rules and standards that banks must follow, including minimum reserve ratios like CRR, that is cash reserve ratios, and SLR, that is statutory liquidity ratio, which are to be maintained by the banks. These regulations help ensure that banks operate safely and maintain the solvency ratios. Another essential role that RBI plays, that of the custodian of foreign exchange or foreign currency reserves. The RBI manages India's foreign exchange reserve to maintain external stability and meet the balance of payments requirements. Through all these activities, the RBI creates a foundation of stability and confidence in the Indian financial system. Okay. So these are the common roles played by the RBI. Some more roles like monetary policy of the country. So monetary policy of the country, handling this particular responsibility is a major role again by the RBI. So the second major responsibility of RBI is formulating and implementing monetary policy of the nation. Now we should know that what is the monetary policy. So simply, monetary policy refers to the steps taken by Reserve Bank of India to control money supply, manage interest rates and stabilize the economy. That is what its role as a monetary policy. So the primary objective of monetary policy includes controlling inflation, maintaining price stability and ensuring adequate flow of credit to various sectors of the economy. Okay. So, the RBI uses various types of tools for such purpose, like these tools are enumerated as repo rate. So, what are these rates actually? The rate at which the RBI lends money to commercial banks are repo rates. One more thing that is known as reverse repo rate. So, the reverse repo rate is that rate at which RBI borrows from commercial banks or take back the money from the commercial banks. And the third one is open market operations. Open market operations refers to buying or selling government securities to influence the liquidity in the economy. One more rate that is also known as bank rate. So, it is a long term lending rate by the RBI to the banks, and the ratio like CRR, that is cash reserve ratio, and SLR, that is statutory liquidity ratio, to regulate the amount of funds bank must hold in reserve. So, for example, if inflation is high in the economy, the RBI may increase the repo rate and making loan more expensive and reducing flow of money in the economy, and thereby cooling down the effect of inflation in the economy. Similarly, in times of economic slowdown, the RBI may cut the repo rate to encourage borrowing and investment, thus stimulating growth. Okay. Through effective monetary policy, the RBI ensures the healthy balance between inflation and growth, supporting long-term economic development of the country. So, it is a policy by which RBI can control the economy of the nation. The next is the payment systems. The third and increasingly important role of RBI is overseeing payment systems in the country. That means it has to take care of the payment system which are prevailing in the country. We live in such an era where digital transactions become a core part of daily life. We used to do the transactions through scanners, through online payments. Okay, so the digital payments are the type in which the economy is moving. So, from banking, online and mobile payments to UPI transactions, NEFT, RTGS systems. Okay. The RBI plays a crucial regulatory and development role in ensuring these systems are secure, fast, efficient and accessible to all. So, the RBI promotes interoperationality among banks and financial technology platforms, encourages innovation in digital payments and ensures that every transaction, be it a rupees 10 UPI transfer or multi crores transferred by the real time gross settlement, that is RTGS settlements, is executed with the highest standard of integrity and security. That is also the function of RBI. Some key payment systems under RBI regulations include, that is UPI, which is commonly known and used by the people, that is Unified Payment Interface. IMPS, that is Immediate Payment Transfers or Service. These are the commonly used. Thereafter NEFT, that is National Electronic Fund Transfer, and one more is there, that is RTGS, it is Real Time Gross Transfers. So, these are the basically main payment systems which are controlled and governed by the Reserve Bank of India. Okay. So, the RBI has also set up bodies like NPCI, that is National Payment Corporation of India, to manage retail platforms, payment systems or retail payment systems and promote financial inclusions. Thereafter, moreover, the digital rupee, which is actually a new concept, or central bank digital currency, that is CBDC, which is being explored by the RBI, is a futuristic step towards digitalization currency and improving transaction efficiency further. Okay. So in conclusion, we can say that RBI plays a major role in running the economy, or we can also say like it, the RBI is the guardian of Indian financial stability. Okay. That means it regulates the bank to ensure public trust. Thereafter, what it also does, it manages currency and inflation through prudent monetary policies in the economy, taking the necessary steps whenever required, and it ensures that the entire payment infrastructure of the country remains robust, reliable and ready for the future. Thereafter, these all things are ensured. Without the RBI, the Indian economy would lack the discipline, structure and direction which is required or needed for sustainable development growth or sustainable growth of the economy. So, whether it is maintaining inflation within control, supervising banks, managing currency flows or modernizing digital payments, the Reserve Bank of India is undoubtedly the backbone of Indian financial system. So, one of the major role of RBI as a financial system we discussed till now. Thereafter, some more systems or some more regulatory bodies are there which controls the different sectors or different types of things. Like RBI guides the banking sector, that is, or some more companies we also discussed about the non-banking financial companies. So, some more regulatory bodies are there which control the different sectors. Like financial regulatory system also contains the bodies like SEBI, Security Exchange Board of India, and IRDAI, that is Insurance Regulatory Development Authority of India. See, these are the also regulators which are regulating the non-banking financial institutions. So, as far as SEBI and IRDAI is concerned, SEBI stands for Security Exchange Board of India, and it was established in 1988 and given statutory powers in 1992 through the SEBI Act. SEBI is the primary regulatory body that regulates the security markets in India. That means security markets are NSE and BSE. On the other hand, IRDAI, that is Insurance Regulatory and Development Authority of India. It was constituted in 1999 and came into force with the IRDA Act in 1999. So, the IRDAI is responsible for regulating the insurance industry in India. The insurance industry is a non-banking company and regulated by IRDA. Both these regulators, that is SEBI as well as IRDAI, ensure transparency, protection, consumer interest and promote stability in their respective sectors. So, the capital markets for SEBI and the insurance sector of IRDAI. So, what is the role of SEBI? So, SEBI is actually a regulator and plays a crucial role in what? In regulating the capital markets of the nation. Its core functions can be classified into three categories. The first one is protective functions, second is regulatory function, and third one is the development functions. So, as far as protective functions of the SEBIs are concerned, so the protective functions can be categorized into protection investors' interest, that means protecting the investors' interest. Whosoever is investing in the shares, they have to protect the investors' interest. Preventing unfair trade practices like insider trading, price rigging and market manipulations. Ensuring full disclosure from companies so investors can make informed decisions. Okay. Thereafter, the regulatory functions of the Security Exchange Board of India. So, regulatory functions includes, it regulates stock exchanges and security markets. Okay. So, stock exchanges are National Stock Exchange and Bombay Stock Exchange. It registers and regulates market intermediaries. There are various intermediaries in the market like brokers, mutual fund companies and merchant bankers. Thereafter, they frame rules and guidelines for the listing, that is listing of the companies and trading of the securities. These are the regulatory functions by SEBI. Next come to the development functions of SEBI. So, the development functions consists of promoting investor education, that means investors should be made educated regarding the share markets, encouraging the use of modern trading technologies. In development function also, they also facilitate the development of capital market through policy frameworks, where types of policies are framed to make it sure that development should go on. So, SEBI's efforts have increased transparency and helped create a more robust and reliable capital market in the India. That is what about the SEBI's role as regulator. Now, coming to the role of IRDAI, that is Insurance Regulatory Development Authority of India. So, IRDAI is the apex or the topmost body that regulates the life as well as general insurance companies which are prevailing or which are working in the country. Like SEBI, IRDAI's role can also be divided into regulatory, protective and developmental functions. So, regulatory functions which are performed by the IRDAI are, first is issuing licenses to insurance companies as well as the insurance agents, that is issuing of license. Thereafter, laying down the rules. Whenever you are issuing the licenses, thereafter you have to laying down the rules for regulation or conduct of the insurance businesses. Thereafter, they also monitor the solvency margins and financial soundness of the insurance companies in the economy. Now comes to the protective functions. As far as protective functions of IRDAI concerns, so protective functions includes ensuring fair treatment of the policyholders. First, that means whoever is holding the policy of the particular company, that should be taken care very fairly. Second one is redressal of policyholder grievance through the insurance ombudsman and complaint mechanisms. So, they have the or laid down the complaint mechanism and ombudsmen also to listen the problems which are not taken care by the insurance companies. Thereafter, preventing mis-selling and ensuring transparency in the terms of the policies which are sold by the insurance companies. The third categorization, that is developmental functions. So, promoting insurance penetration in rural and underinsured regions. So, it is also a function that after encouraging innovation in insurance products. So, we can see that previously it was traditional products, now we can see the ULIP plans also and hybrid products. Ensuring the growth of insurance industry and simultaneously maintaining the consumers' trust, that is what ensured by the IRDAI. coordination and impact. Through SEBI and IRDA function in different domains, their coordinated efforts are crucially, especially in cases where insurance companies actually listed on stock exchanges, or when investment products have components of both markets as well as insurance, like unit linked insurance policies are there, that is, which are linked to the share markets. So in that case, these are regulated combinedly by both SEBI as well as IRDAI. So they ensure, what they ensure? Stability of the financial system, and thereafter protection of investors' rights and the policy holders' rights. That means investors in share markets and policy holders in insurance, the protection of both customers. Thereafter, greater confidence in Indian financial markets. Okay. So recent development, as far as recent developments in this particular areas of controlling or regulation are concerned, so SEBI has introduced a stricter norms for IPOs, that is initial public offering disclosures, and ESG reporting, that is environmental, sustainable and global reporting. IRDA is also working on insurance for all by 2047. So that means those who are not able to get the insurance policy till now, so insurance for all is working by the IRDA and aiming to ensure every citizen has access to the life and health insurance. So both regulators are pushing for digitalization and better cyber security framework in their respective areas to ensure these all aspects. So in the conclusion, we can say that both these all regulators, inclusion, that is SEBI, IRDA and SBI, are the pillars of Indian financial architecture. While SEBI ensures fair play in the security markets, IRDA ensures that insurance policies are protected in the insurance sector is healthy, and expanding both contribute significantly to the growth, stability and credibility of the Indian economy. That's all for the today's session. See you in the next session. Thank you.